Welcome back, investors, to Ticker Time News. I'm Adam, and not only is Elon Musk dominating the headlines for establishing an ownership stake in Twitter, ticker symbol TWTR, but his electric vehicle company Tesla, ticker symbol TSLA, is also reporting Q1 production and delivery numbers that were way better than feared. For the quarter, deliveries increased by 68% year over year to 310,048, slightly missing analyst expectations though. However, with supply chain concerns intensifying due to new COVID-related lockdown measures across China, the results provide a sigh of relief. And I would love your support in joining us to take on the challenge of beating the market. Click the first link in the description to learn more. Tesla's report looks especially impressive when stacked up against Ford Motor Company, ticker symbol F, and General Motors, ticker symbol GM. I know maybe it's not fair to compare to legacy automakers when talking about Tesla, but hold on just one moment. Both of those companies, Ford and General Motors, have suspended or are suspending production at plants in Michigan this week due to supply shortages. In March, Ford's U.S. sales plunged by nearly 26% year over year, while GM suffered a 20% year-over-year sales decline in Q1 22. It's been tough on the industry as a whole to see Ford and GM continually push out their timelines regarding normalization of the supply chain. After expecting significant improvement earlier this year, GM is now warning that disruptions will persist into the second half of 22. In what Elon Musk characterized as an, quote, exceptionally difficult quarter, Tesla leaned in on its ingenuity and resilient supply chain partners to deliver a relatively strong performance. Still, Tesla's not immune to the challenges that are facing the entire automotive manufacturing industry. In Q4, the company delivered more Model S and X vehicles at 14,724 than it produced at 14,218. This means that the delivery numbers were slightly inflated as the company completed orders from the prior quarter. Relatedly, total production was down on a quarterly basis to 305,407 vehicles from 305,840 vehicles in Q4 21. The next quarter could see a more significant decline if Tesla's Shanghai facility doesn't reopen soon. Due to the government-imposed lockdowns, that factory suspended production on March the 28th and has continued to remain closed ever since. Tesla hoped that the shutdown would only last a few days, but China's zero COVID policy is preventing authorities from easing restrictions. At this point, it's unclear when the Shanghai facility will be cleared to reopen. The opening of Tesla's new Berlin factory on March the 22nd is timely and will ultimately expand its production to 500,000 vehicles annually. That's huge. But it does take time to significantly ramp up production though. And automotive gross margins at the factory is likely to lag until economies of scale kick in down the road. Tesla's production and delivery report highlight the divergence in performance between itself and key competitors like Ford and GM. The fact that production has remained relatively stable in the face of strict lockdown mandates is viewed as a green light for investors, especially in the wake of last week's stock split news. So, let me know, how impressed are you at Tesla's overcoming these supply chain challenges? Let me know in the comments below, as your comments will help us all to better understand Tesla and maybe even the supply chain issues. If you could, smash that like button, share this video, and join us on our quest in beating the market by clicking the first link in the description. And if it's your first time watching, click subscribe. For Ticker Time News, I'm Adam. Thank you so very much for watching, and I'll see you in the next video.